Good morning, everybody, and this is your S&P 500 day trade setups for today. So, nothing really going on. We did sort of rally a bit onto structure and then fall off. So we'll look at that on the hour, but ultimately, I want to see us get it back above 42.82 before we start looking for longs. So at the moment, the trend is down, but the problem with this, you've got this downtrend and then you're creating these higher lows here. So this bottom trend line is important, top trend line is important. We're in a triangle, and as I said yesterday, it's probably going to stay in the triangle until tomorrow. We're waiting for the Feds to come out. So there's also a lot of European data coming out today as well. So at the moment you can see a clear trend down. We did sort of muck around. We sort of hit a structure, and that structure was on the hour. So we'll look at that now before sort of selling off. But at the moment, do we want to buy here? Definitely not. We're only looking to sell, and we're only looking to sell off areas of resistance. So have no interest in buying down here. We're not trying to second guess where the bottom is. This thing is in a downward trend. For as long as we're below the moving averages, it's down. So basically, for me, any trade that I may take is a scalp, and it's going to have to be glaringly obvious before I jump in on them. So moving down to the hour, and you can see a lot of chaos here, and the structure I'm talking about is pretty much right there. So you can see a few tails there, a lot of tails there, a bit of chaos here, tails, more tails here, more tails here. So this to me was the line in the sand. And look at the divergence forming at the moment on the hour. So I suspect more than likely back to the upside to come and test something. So again, you can see if as long as the moving averages are below the 155, that is indication that the trend is down. And you can see this double rejection here is pretty much right at this level. If we quickly have a look at the 15 minutes, you'll see same scenario. So price was all over the place. Typical for a Monday. You basically wait for the for the US Open. There was the US Open was here, rallied a bit onto an area, and then immediately this nice big piercing pattern here, which is pretty much a pretty solid move, especially when you are when the moving averages are like this. And then look at the oscillators as well, and then you had this massive move down. So basically, you had almost a 200-point stop loss for 600-point gain. Now, if I just drill down to the 5 minutes, which is also something you could have traded yesterday, because some pretty decent structure. You can see there's a structure to the left, and then you've got a 5-minute piercing bar as well. So what this means is break below that, stop up there. Look at that, I would have raised my stop a little bit higher. So it's 172-point stop loss to there, and the reason for that is this tail. That's why I would have raised my stop loss up. But yet again, that was also a signal early in the day. You can see a nice juicy bar around the level, and then a pullback. And just a word of warning, what I typically do if you do trade before the US Open like that, take your profit early, wait for the US Open, because typically you have a massive move back up to the area that was being tested in the futures market, and then you get the second rejection and down it went. So for today, pretty much similar scenario. So I would be looking at, I'm just going to give you the two levels. You can see there's a level in between. So you're looking at a pullback onto 41.95, 4200 and 42.09. So looking for price to come back in there, and then I'm looking for a second move. Bear in mind the second move breaks a trend line. So that would be fairly interesting, because I think you'd probably have a move of around 840 points to the downside. That's if we get through the lows of yesterday. So that's kind of my scenario at the moment. I'm not too keen with it because of the oscillators, and probably again a 15-minute trade. So although the oscillators are grouping to the upside now again. Let's see what happens in the European session. The DAX does look like it's going to head back down and close that gap. If that's the scenario, then I suspect you're more than likely going to get a downward move on the S&P as well, and then get out of it, wait for the next pullback, which should happen just before the market opens, and then get back into it as soon as you see the rejection of structure again. So trend is down, you're looking for shorts, but you want to be shorting off a level of resistance, not sort of at the bottom of the move like it is now. Okay, anyway, that's kind of me for today. I hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.